Hello everyone, welcome to the weekly chart review for Forex. So let's dive right in. There's been some development with the positions I set up last week, so let's take a look, right? AUD CAD, nothing, AUD CHF, nothing, AUD JPY. So this trade idea I set up last week didn't quite get to my entry, so it's still kind of just sitting there, from how the week went. It almost didn't really do a whole lot, right? It's making me nervous a little bit because this candle pattern tells me that there's a good chance that it's going to start going down and going down further than what it's been doing, okay? So, like I've been mentioning before, I'm a big fan of EMA shifts. Okay, right now I do not see an EMA shift happening to the upside. Right now it's just been a little consolidation and it shifted down. So from what I can see, I'm not really that confident that it's going to go up, right? I'm still going to leave the trade idea alive because overall this currency pair is bullish, okay? The only concern that it brings to me is how the week actually went, right? It just kind of went sideways. It went up a little bit, then back down. So I'm only going to be bullish on this trade when I see an EMA shift on the 4-hour. All right, that's pretty much it for AUD JPY. AUD NZD, not interested. USD, that's the Scholar Strategy plays, and I'll dive into that in the following video. CAD CHF, it's starting to consolidate around this entire volume area. All right, and that's kind of been the zone for the last few weeks. But I just want to show you something. If we just go on the daily, where it was right at the bottom here to the top, okay, what we're seeing is a pretty strong rejection around that 618 line. All right, so if we jump in on the 4-hour, this is kind of what it looks like. And what that's telling me is this is a very strong flag pattern. However, I believe it's going to be more bearish than anything else, just because we didn't make new highs, but we did make new lows, even if they were slight. Okay, so what I'm expecting this is to kind of go back down. So a good trade position would be if I see another EMA shift going down. But right now I can see kind of a structural trade, and it's forming a little bit of an, I don't want to say a cup and handle because that's not really it, and I wouldn't trade off those anyway. So yeah, I mean, it's forming a bit of a double top inside of a supply zone. Yeah, even still, I would wait for an EMA shift, but CAD CHF, there's better pairs to trade, right? Let's jump into CAD JPY. So here, this happened. Bit of a bummer, I mean, I expected this to bounce down once more, but it didn't quite get there. So ultimately, the entrance off the close would have been the best idea. It was 10 pips. It wouldn't have been too crazy. So yeah, I mean, 37 pips stop loss. We could have brought that up to a 47 and right now be in about 116 pips in profit. So that's almost a 3-to-1 just by jumping it right on the entry. All right, I am expecting this to keep going higher, at least till it fills this institutional area. Could reject back down, but like I've been saying, overall this is still bullish. Right, we can see all the EMAs pointing upwards and still very well spread out on the daily. So yeah, I mean, bit of a bummer. I should have made the entry right at the close. I was maybe a little bit too skittish and dropping it a little lower. But, it is what it is. Even on the 4-hour, this is a nice institutional play, and it has the potential to come back down to that zone. So I'll still leave up the trade as it is, but maybe I'm going to move it up to this area here. It doesn't seem to be hitting the black, so this could be an even better trade at 27-to-1 ratio. Or sorry, 27 stop loss, a 21-to-1 risk to reward. All right, so that's my kind of updated CAD JPY. If you didn't grab that entry, again, bummer that it didn't drop another 10 points, but EMA shift is typically what I like to say when it's off of no other structure except for Fibonacci, right? And the shift would have happened up here, so a little bit of TP taken or a break even. So one way or another, this is going to be my new institutional play, so I'm a little bit more confident in entering around that area. CAD or CHF JPY, a lot of the CHF pairs did a lot of that kind of nonsense, right? A huge drop and then a recovery, but you can see recovery was all around 618 and then a bit of bouncing around that. No clear entry right now, so we'll move on. Euro AUD is still a little bit of ways from my target for it to go down. As you can see, the lines aren't really all that spread out there. They were at one point, but they did a very sharp recovery, and I'll show you by how much that recovery was. Okay, if we just take a basic fib and draw it from this high to this low, you can see it was very close to that. Where is it? To that 618. I mean, it was in the golden zone around 50%. It did make a new low, so this is what I'm basing the structure off of now, right? So 618 area is going to be right here. We have made a new high from this particular spot, so I do believe that this is going to be hit. And again, I'm risking 60 pips on the stop loss for a 10-to-1 risk to reward ratio. I do believe it's going to keep climbing. There is a very strong institutional that formed around this area. Euro CAD, this one for sure, right? Very similar setup to Euro AUD, right? The difference is AUD is slightly weaker than CAD, so I'm expecting a bit of a different situation. Like you can see, EMA lines are completely different between the pairs as well, right? Even though the charts look sort of the same. But anyway, EuroCAD, this candle inside of that, look at this. This is what I wrote as far as my my little note. Right, I set an alert for it to get back to that area. That's what I'm very keen on taking the entry. If it hits, it's going to be fantastic. It's right at the 50%. And yeah, I mean, it would be about a 77 pip stop loss. Pardon me. But I'm thinking that it's just going to be a quick wick into entry and then up it goes, right? So originally I'm thinking set a buy stop, but that may not be possible. I have a feeling it's going to be a very quick move based on what happened a few weeks ago. All right, so that's kind of my position for Euro CAD. Slightly different than Euro AUD. I believe this will climb just a little longer. And Euro CAD, as you can see, just the difference between these pairs, CAD is far stronger than AUD. Okay, Euro CHF did a deeper tracement to the 718, so I wouldn't say this is a golden zone entry. However, there was an EMA shift. I'm not really a huge fan of doing CHF pairs, only because there's a lot of movement, and as far as the gains, they're very small. Okay, Euro GBP. Now I'll even jump in on my strategy on this too, but on the smaller time frame, it was almost consolidating, so I stayed out of this completely over the week. Euro JPY, very nice setup actually. So this put a little check mark there. TP was hit last week, fantastic. Potential could have been for a 6-to-1 ratio, but a 4-to-1 was all that I was expecting out of this. It did end up going higher, hitting another supply zone where this was at before, so it gave people another chance to sell positions if they were on very long-term shorts or long-term buys, one more time to jump in on there and get rid of your position before dropping lower. I do believe that this is going to go much, much deeper, but over the last little while, it's just done very large consolidations. So I'm not really bullish or bearish on this. It's just short term, there's a lot of volatility. I'm expecting it to kind of make up this imbalance right here. That's why I only have the TP set as a 4-to-1 here as well. And again, playing off an EMA shift, like I always encourage off these kind of pairs, this is slightly bullish overall, so counter trend trade, you got to be very careful on those, right? So even right now, a 60 pip stop loss, currently sitting at 45 pip profit, right? If you took the trade right at the end of that candle, which would have been early in the morning on the 6th for me. Okay, but anyway, that's where it's set right now. So Euro NZD, not a huge fan. I'll leave it alone. But like you see, I mean, this is just climbing constantly. The only trouble is that on the 4-hour, the EMAs keep crossing each other. Like, this looks very straightforward. Let's say even on a 6-hour, right? They don't cross as often or if ever here. But on the 4-hour, that's typically what I base my trades on. Like, it's just, right here, crossing, 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 almost crossing, bunch of consolidation, almost crossing, crossing, crossing. It's a little too much for my taste. This would have been a very solid trade had I saw the entry around in April, right? Maybe even this institutional play, this would have been the mark to enter from. But, sometimes when I quickly scan over pairs, I don't really get to catch this. That would have been a great entry. It's exactly the structure trading I teach. And yet, just missed it. It's hard seeing every single trade idea. But just to give an example, over the course of, that's in the way, over the course of 28 days, it would have been about 1,250 pips, right? So it's pretty significant in a month-long trade. Euro USD, great TP hit on this. That was a fantastic trade. Well done to those who stuck with it, right? The first entry, oh, that would have been great. Damn, break even. But you know what? If you would have stuck it out or forgot to move your stop loss to break even, great profits made, right? Sometimes those silly mistakes happen, and they happen for for our benefit rather than the deterrent. So it worked out. It's still a very nice trade, 16-1. I knew it was going to be going down. It's just as far as getting that perfect entry, sometimes not going to be there. But again, if it was wicked out on break even, and then I'll set the replay to show how that particular entry would have looked like on the 1-hour time frame. You see, it would have broken even, and then a doji or evening star like that would have happened, right? So if that breaks it and then I see an evening star like this, it's a very good opportunity to jump back in, even on a sell stop, right? So if it does go higher, oh well. If it goes lower, like look at this. And it would have went lower instantly with 138 pip profit within that time frame. So whatever the case is, right? I mean, you jumped in on it, great. If you missed it, that's a bummer, but you know what? There's always going to be more. So nothing to fret about. Switch that back on the daily. All right, I don't know, 4-hour, whatever. Okay, so that's kind of it. And same idea here. I believe it's going to do a little bit of a recovery to this imbalance, thinking that it would have done the same thing here, but it just kept going, right? So it's a possibility this will happen as well, right? I don't get that FOMO. Don't jump in when it's already this deep because your stop loss will be gigantic just to get a little bit of profit. So if it doesn't come back, that's fine. Don't risk it. Look for another entry. GBP AUD right here, it's kind of in an entry zone right now. Off the 4 hours, been consolidating, so I wouldn't even say EMA shift because it's shifted and just went sideways. And the MACD is showing that the signal's still going down, and histogram is consistent with the candle. So I would say there's a very good chance this will drop once again. Right, similar idea to what was happening here. It had a little bit of a spike, went sideways, and then down. Right, I have a feeling we're going to see something similar happen there. That's just the trade idea for that. GBP CAD, I'm not super comfortable with. It does look a little bit better than AUD. Yeah, just a bit. Maybe this would be a smarter trade, trying to aim for that imbalance right here, or the institutional that happened on the 4 hour. For whatever reason, I'm liking AUD a little bit more. I don't know, guys. Think about that one. Do the analysis on GBP CAD. Let me know what you think. It's a potential. I'm missing a good trade, but at this point in time, if we're looking at charts for 3 hours, my eyes are a bit fried. You know, yeah, it's a very good chance this will be a better play. EMA's already shifted. It hasn't been consolidating. It pulled up a little bit, formed this bearish engulfing candle with both EMAs going through them. Yeah, I mean, this is kind of a textbook setup for a good drop. And all EMAs, except for the white and pink, are pointing down. Even the larger ones are. This could be a good potential sell, actually, guys. So if we look at taking a sell stop somewhere around here, with a C, and that's the thing, with a stop loss of, we're going to do 100 pips, 60 pips. Ugh, yeah. So around there, sell stop. Let's see if it gets down to this green marker, kind of in just a little bit below the halfway point of this big drop. Okay, and that's a 12 to 1. And even if it doesn't get there, being less greedy for a 10 to 1 even would still be very good. So yeah, I'm kind of curious. Maybe I'll set a sell stop for that and see where it goes. GBP CHF, similar kind of setup as before, but I'm more comfortable with CAD at this point. More candle patterns to go off of. GBP JPY, a bit of a bummer. Did not go as high as I expected at first, but the EMA shifted. So yeah, this trade's invalid. Actually, you know what? I'm not going to invalidate it. I'm still going to keep it up because there is a chance that after it makes its move, it'll come back to that area and then drop harder. So I'll leave it up. I'm out of curiosity. Maybe it'll be a very good trade position still. GBP USD. Entry happened, so this is looking really good. Okay, and where was it on the 1 hour? Here we go. All right, right off there, it would have been EMA shift off the 1 hour. I do believe I was mentioning that before. Like I said, 1 hours are good if you want to be a little bit more risky. The 4 hour EMA shift, because I do remember setting this up, but I didn't quite, I didn't want to jump in on it too early. But on the 1 hour, you saw that this worked out nicely. If you jumped in on the 4 hour, the EMA shift would have been at the end of that candle for an entry here, right? So either way, this is looking like it's shaped up to be a very good trade. All right, currently sitting at 193, 195 pips in profit from that entry, and if it would have been up here, it would have been around 320, right? So either way, this has been a very good position to enter from. Yeah, there's no reason that I feel it's going to slow down at any time, right? Like if you took it on the 1 hour EMA shift, that would have been an exit, right? Good sign. However, what was the original one? Somewhere right there, it would have shifted twice by now. So this is why I'm saying 4 hours are a little bit more stable. They have their great moves that happen. So here we are, even if you were nervous, you could set the stop loss to 80, but 60 pips, like I said, is my threshold. So I'll risk it on that, and here we go, 193 pips in profit on the 4 hour. So great trade entry. This is still very valid. Bitcoin, it's kind of dawdling, right? I mean, it hit off the 50% and dropped lower, so maybe it doesn't want to do a 618 retracement, but I'll still leave it up because, as you see, it's not making new lows, it's climbing. No, thank you, NZD. I do want to show you guys the UK and USD. Okay, look at this on the daily. Now these are oil stocks. Okay, look at this long-term chart going all the way back to where it peaked in beginning of March to this. Okay, so the exact same trend-based fib extension I used on US oil. Right, you can see peak, the bottom right here, and then the next peak. You can see how deep this went down. But for UK oil, it just touched that area and reversed. So it's looking like UK oil is a bit more stable to trade, right? Just based off of that, like you could see it's significant. It's almost exactly a $5 difference, $5.20. All right, but based off US oil, if you just compare the two, right? You can see UK oil is a little bit tighter with its pricing, but it did hit, what is it, 138 per barrel, whereas US oil peaked at 129. So that is a difference of $9 a barrel, right? Where you can see the difference right now is 5. So it's a very good possibility that the higher that these go, the wider the split becomes. Okay. Right now, I'd be more comfortable trading UK oil. This is looking much more stable than the US. We've had an EMA shift on the daily. That's a fantastic sign. Look how often that happens on the daily time frame, right? Like once it does, it goes for quite a bit. If it shifts down, it went down for a month, right? Let's take a look at the weekly. Weekly's still down, but the day, look at the candle pattern that it formed, right? That's not exactly a morning star, but that's the pattern, right? Long candle down, kind of a spinning top, and up it goes. So I believe that was kind of the bottom that we hit on UK oil. It was around the 84 mark. US oil, I believe, was 77, 76, around that area. That was the low. It's climbed already from its low. In 8 short days, it went up 21.94%, 22%. In a week, that's pretty damn strong, right? I would say, what was it? Actually, I want to take a look at Oxy because I did Oxy and COP, right? ConocoPhillips. Let's see what happened on the week with Conoco. Where do we see? 7 days, right? So I want to say this was the bottom before the reversal. That's 10 days, so I just want to make it consistent. So we'll go from the bottom of this one, 8 days. Okay, so where this wicked from to where that wick was, look, 21, and where it closed, 18%. If we're going from the absolute low that ConocoPhillips was to where this closed, 20%. So we're at 1% difference from the actual stock compared to the barrels to trade, right? There's Conoco. Where's Oxy? Here we go. Same idea. Where the lows were to where it hit the high. Look at that, 25%. But it closed at 21%. What do you know? Look at the two oil stocks. It doesn't matter which one you pick. They're going at the same rate. And I should have known. It had a little bit of, went through my lines, but did a very strong rejection off that purple. Didn't want to go deeper. Now let's pick another one for fun. Let's say ExxonMobil. Here's the lows and the highs. Look at that. And it closed 20%. Pretty consistent. Where's the one last one? Chevron. Look at the lows and where it closed. That was the worst performing one at 13%. Still not too shabby overall, right? So anyway, you saw out of 4 oil stocks, they all went up this week as the barrels went up. So it's very consistent plays, guys. All right, as barrels go, stocks go. It's hand in hand, right? The more that the barrels are worth, the more that the stocks cost. All right, so what am I doing here? Holy, watch list, there we go. All right, folks, so those were all my plays for the week. I can jump on silver quickly, like this is kind of a trade idea. It'll come back down to that zone. XTI, you know, those were US and UK oil. It's pretty much the same thing. So it's kind of where I'm sitting at. I think it's been a pretty decent week. I just want to give everybody a heads up. I've mentioned it to my colleagues that these next 3 months are going to be the worst for Forex trades. Okay, very weird volatility. It is year end for a lot of things, and we're going to be seeing sharp moves up and down, so it's not really going to be difficult to take proper positions. All right, so be wary of what you jump in on. This is going to be a great time to showcase scholar strategy. So I hope you catch that video this week, and if you don't know it yet, I do have an entire training session devoted to that strategy and how to teach you how to read stocks, or not just stocks, sorry, how to read charts and technical analysis. So yeah, it will be in your benefit to learn that. I will go over it in the video and show you the profits for the week. All right, guys, until next time, take care.